This podcast is brought to you by the award-winning prop firm, Fidel Crest.
So what I realized was I was using a standard on one lot. So I was making $100 during New York and $100 during Asian. I'm like, oh, I'm at $200 a day. That's great. Then I noticed, as the weeks and the months went on, I was doing it rather consistently. And even on my losses were relatively small because I was only taking 5, 6, 7 pip losses. Sometimes I would let it hit the 10 pip loss, but for the most part, I was taking relatively small losses. So I'm like, man, I can do this consistently. What if I open up another position with that one position I already have open, still catch the same move, just add another position trying to maximize on it. So then I tested it out. So I would have one position, I'd have my main position open, then I would open up a smaller one, like a 0.50 or a 0.30, and I would catch 10 pips on both of those positions. So I was doing like $130 a day or $150 a day. So once I saw that I was consistently doing that, I did the same thing for Asian session. So now my $100 days were turning into $300 days because I was adding positions, catching the same 10 pips, but just adding an extra position. So once I saw that I could do that, and as I started raising my lot size, where I would go to 2 lots, 2.5 lots, 3 lots, then I went to 5, 6, 8, and 10. And I said, okay, now I can, instead of having a $300 day or a $500 day, I can have a $1,000 day because it's obvious people are making money doing it. I just need to figure out how. So it was actually through a friend of mine that I found out that you did not need IML to actually trade. And when I found that out, that friend of mine who was actually friends with Q Banks, who actually put me in touch with Wall Street Academy and said, hey, this is the top guy in the industry. This is the person you want to learn from. And that's all I needed to hear. I'm like, that's the top guy. That's where I'm going. I had my little aha moments here and there, but when everything clicked for me was when I discovered scalping. Because when I first started learning how to trade, I did not know what scalping was. I'd never heard of it. I thought when you're trading, you had to catch an entire move, when in reality, you can catch this much of a move and still make money. One day, I messaged him and I said, hey, Raja, I'm really struggling. I'm on the verge of giving up. I can't seem to understand this. I can't seem to get anywhere with it. I don't know what to do. And he messaged me back and said, hey, let's do a one-on-one. And it blew my mind because I'm like, a one-on-one? Like just you? Like just us? Like nobody else? Like he's like, yeah, like when are you available now? Let's do it now. And I was like, oh my God, I started and I'm freaking out because I'm like, I did not expect that. I expected him to say, okay, it's okay. Just keep studying, keep your head up, typical stuff. But he took a special interest in me actually getting the help that I needed. So I said, you know what? This guy knows what he's doing. He's teaching. He's taking the time out of his day to help me. The least I could do is just do what he says to do. And I did that. I sent him my charts every day that I traded, every session that I traded. I sent him my charts. He would give me feedback. He would help me with this and that. When I got in my trades, I took 10 pips and I got out. I would close out at a certain, if I took a loss, it was a small loss. I was managing my losses the way he taught me to. And ever since then, I've been profitable ever since.
Episode 214. Folks, we've got SharlineFx here up on the show. That's coming up in a second. Now, before we jump in there, just want to remind you of the Fidel Crest 50K challenge that's up for grabs. In fact, there's 5 of them up for grabs. There's a link in the YouTube description or the podcast description. Go on there, have a look how it works. I've got a little video there for you to watch. I'd love to see a few more of you entering that so that we can get this underway. It's going to be awesome. Now, the other thing going on here, we've got the Robot Builders Club where I teach you how to automate virtually anything you can dream up. We use a software called FX Dreamer, and we've got some amazing things happening over there. So this February, we have the bootcamp that you can get access to along with the build that we did for the bootcamp. And we're also building out something in the Robot Lab Live, which is a live build. You can jump on and get access to that, and it's based on smart money concepts. Folks, I'd love to see you on board there. Links below the video and in podcast description. Last but not least, let's hear from my sponsor and get on with the show. Fidel Crest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Fidel Crest apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. All right, folks, here we are on Trading Up. We've got SharlineFx in the house all the way over there in Miami, Florida. Ex-police officer, been trading for 5 years in the Forex market. So we're going to hear her story today. Welcome to the show, Sharline.
Thank you for having me. I appreciate it.
Hey, look, to start off with, I mean, how on earth did you get into trading?
Oh man. So I think my journey is similar to a lot of people's journey, like IML, right? IML exposed. I gotta give it to them. Their marketing is excellent because if anything, I have to thank them because they are the ones who exposed me to what Forex is. And I pretty much took it from there. But yeah, I got it started with IML in 2017, but I didn't actually take it seriously until 2018 when I was approached with it again by two different friends of mine who happened to know each other, and they were both trading. And I ended up getting into it. But I was only with IML for like about 4 months, 4 or 5 months, because I kind of realized that I wasn't really learning much from them. They were more about, the recruiting and signing people up. And I just wanted to learn how to trade. I wanted to learn how to read a chart and be able to make money from it. I didn't want to take signals. I didn't want to copy and paste. I didn't want to do any of that. So yeah, I got started in 2018 in March of 2018. And I've been trading now ever since. And now I'm profitable. And it's been a great journey. It's been a great journey.
And so I mean, it's funny. Like quite a few of the guests say that they started off with IML. How did that progress from there in terms of you had I suppose a unique angle of I just want to learn it. I don't necessarily want to take any sort of quick and easy way. I mean, what was the journey from there to get to the point where you are now?
What it was is I was losing a lot of money. I was losing money and I didn't know why. I did not know why because they were just giving signals. They were telling you sign up for this app, sign up for that app. I barely knew how to even, when the signal came, I barely knew how to even put it into MetaTrader because that's how much they don't teach. They just sign you up and tell you, go get people,
Right.
Oh, money, we'll send you a signal. What's a signal? You don't even know what it is. Right. So when I realized every month I was paying, because I hadn't recruited anybody. I never recruited a single person in the entire time I was in it. And it was because I wasn't making money. So I didn't want to recruit people into something that I was doing. And I didn't even have results doing it. So I didn't feel comfortable sharing the idea with someone without actually having something that tangible to show them and say, hey, this is why you should sign up with them. So when I realized I was losing money hand over fist, I had loaded my live account with $500. And that's how I knew it was nonsense because I didn't even start with demo. They started you right off with live. And they were like, hey, get your live account, put money in there, and then you'll start making money today. And I'm like, when you hear that, you don't know any better. So you're like, okay, you see everybody else around you making money. So you're like, all right, not realizing it's all demo. It wasn't real. I didn't know what demo was. I thought it was real. So I went ahead, I put $500 in my account at the time. And at the time, that was a lot of money to me. That was a lot of money to me. So I put 500 in there. I signed up with IML. I think I paid like 300 something bucks to sign up altogether. And every month they were taking like 200 something bucks out of my account. And then I blew the $500 account. They were sending like, I remember the first trade signal that I took that was sent to my phone was a US 30 trade. And it was during London session that they sent the trade, which is odd now, but they sent it during London session. And I remember being in profit. I was up like $100 on the trade. I was like, oh, wow. I really am making money with it, but I didn't know how to close. I didn't know nothing. So I just left it there. And when I came back to my account, I was negative like $300. So the trade had to retrace and I got kicked out of the trade. So,
it sounds like it was a high risk trade if you're risking more than half your account.
Exactly. Yeah, exactly. Yeah. No idea what the lot size is, nothing. So when I realized I just kept losing money and I wasn't making money, every time I went to the meetings, every time I would talk to the person that signed me up, it was always, okay, come do this, come do that. It was never like, hey, sit down and let's go over charts. Let me show you what support and resistance is. Let me show you how to do this. It was just a lot of salesy stuff, and I just wasn't interested. So after I had lost a good amount of money, I was like, I'm out. I'm out of there.
After the show, I realized there was a question I forgot to ask. So I'm going to ask it now and lob it into the show here. So what I was intrigued on finding out was like how you went from that $500 account to being able to trade like these much larger sizes on a larger account size. What was how on earth did that happen?
Okay. So I used to be a police officer and I was a cop for about 6 years. And I'm a cop in Miami, downtown Miami, which is a huge, huge tourist area. And downtown Miami is big on events. There is literally always events going on. When COVID hit, it literally like shook the entire city because there was always something going on. So as a police officer, there is tons and tons of what's called off-duty jobs, and off-duty jobs are like kind of overtime jobs where you're working as security basically for concerts, restaurant openings, Art Basel events, sports games. You know, you have the Marlins, you have the Miami Heat, you have the Dolphins. So there's always something going on in Miami. So those jobs, they are in abundance, and those jobs don't pay no less than $300-400 per job, and they're paying you 50, 60, 70, sometimes $100 an hour minimum for 3 hours. So you're at minimum going to get paid 3 hours. Even if you work an hour, you're going to get paid for the whole 3 hours. So I had my regular income from my regular 40-hour-a-week paycheck, and then I would work overtime, which is off-duty jobs. So I was pulling in sometimes 2,000-3,000 a week, sometimes in those off-duty checks. So that's how I was actually able to fund my account. I was just working as much overtime as I could, which was a good and a bad thing, because it was good because I had the funds to be able to fund my account, but it was bad because the money came so quickly and so easily at times that it caused me to over leverage and to try to be greedy with it, because I had two, three, four, five, sometimes $10,000 in my account, and I could just go crazy with it, not really understanding what I was doing trading. So once I got tired of losing as much as I did, because I had lost well over $60,000 in my first year, I kind of got tired of it. And I also got burnt out from working so much as well. So I kind of had to slow down. So then I said, okay, I'm going to slow down just a little bit, take the money that I make, and I'm going to just fund my account with it and just grow that account as much as I could. But I was still going to practice really good risk management. So there was a time where I had 20, 30,000 in my account, but I was still using 1 lots and 2 lots, just trying to slowly build up my confidence, slowly build up my skill. And later on, I could, grow my lot sizes as I wanted to. But I still had the funds available for me to continue growing my account. So that's actually how I was able to actually grow my account very quickly and be able to have a larger trading account to be able to take higher risk.
Awesome. Well, look, we'll just get back onto the rest of the interview. Hopefully you guys got a bit more insight in there. Okay, so where did you get to after that? Like, so you didn't know how to do anything. It's funny when you think back to the beginning, and people probably listening to this show are going to be like, some of these episodes are going to go way over their head. So it's quite a good thing for the newbies to listen to this, so they can go, okay, well, I didn't know what a signal was either.
Yeah.
So how on earth did you sort of get yourself? What were the educational steps you took? That path of education.
Okay, so I was under the impression, and this is something else that IML does, is they put you under the impression that you need them to trade. Like, you need them to actually have access to the markets. And I had no idea that you didn't. I thought you had to be with the company to have access to MetaTrader, to, put money in your account and trade and whatnot. So when I found out that you did not need them, which I found out through another friend of mine, I was like, what? And they're like, no, you don't need them. You can trade by yourself, and my mind was just, that information alone blew my mind, because it just went on to tell me how much I didn't know. So the fact that I saw that little bit of information that was now insignificant, but back then it was huge to me, I said, maybe I should do a little more research in this and see, maybe there's other things that I wasn't aware of as well that I need to learn to see, because it's obvious people are making money doing it. I just need to figure out how. So it was actually through a friend of mine that I found out that you did not need IML to actually trade. And when I found that out, it was that friend of mine who was actually friends with Q Banks, who actually put me in touch with Wall Street Academy and said, hey, this is the top guy in the industry. This is the person you want to learn from. And that's all I needed to hear. I'm like, that's the top guy. That's where I'm going. It's like learning how to play basketball, and someone says, hey, this is Michael Jordan's course. This is the top guy. That's who I need to learn from. You know what I mean? So, and after that, his course was the first course I ever bought, and it was game over from there. At that point, I dove in and I never looked back.
And so I suppose that's quite lucky that you had a friend that was friends with Q Banks, who's been on the show. If you folks haven't seen his episode, and because are you living quite close in that area or something, or is it just
I have no idea. I feel like it was almost like I don't know, divine intervention or serendipity. I don't know what they call it, but I I don't know. I can't even say it's just, I think it was meant to be. I'm a big believer in the law of attraction and, the universe, bringing you the things you're supposed to have in your life.
Yeah.
So it just so happens, I knew him and he knew Q, and he was a trader. Q was a trader. And then she's like, you want to learn how to trade? Okay, this is who you need to go to.
Yeah.
So it just so happens. And this friend of mine, I didn't even know him that well. We were like friends, but not friends. Like we didn't talk every day. We didn't hang out every day. We were kind of more Instagram friends, if anything. And he was actually posting profits one day on his Instagram. And when I saw him post the profits, which is the same stuff you would see through IML people, I messaged him immediately. And I'm like, hey, what are you doing? Get away from that company. They're a scam. They're going to take your money. It's not real. And he messaged me back and he's like, what are you talking about? Like, like, what do you mean? And I said, no, you're part of that company, right? That IML company. He's like, no. And I said, what do you mean? He's like, no, this is me. I'm just by myself. I'm not with that company. And I'm like, what? And literally the next day, I called him. I said, I got to meet you. We got to talk. And I met up with him. And after that, that was it. That was it. And I said, oh no, I gotta.
That's
hilarious.
Yeah, that's hilarious. I find it funny because you were so, I suppose, blinkered to the fact that the whole markets are not just IML. You've got, anyone could trade. There's millions, thousands and thousands of brokers out there. That's hilarious. So okay, so you learned from Q. Have you taken that stuff and evolved it to suit your style, or do you just literally, I'm just copying and pasting exactly what I learned and replicating it?
No. Because here's the thing about trading. I think you can learn trading from, certain people, but you're always going to add your own little twist. You're always going to add your own little touch to it to where it's understandable for you. So I don't trade exactly like what I was taught in Wall Street Academy, because I did buy other courses as well, because I'm a big believer in like diversifying, right? You don't want to put all your eggs in one basket. You never know who's going to teach you, that one thing that makes everything click for you. So I did buy numerous courses along the way. Wall Street Academy was just the first course that I bought. I studied that for right around 9 or 10 months before I actually looked into other courses. But I would say that course and one other course were the only ones that like really did it for me. And then I kind of took the material that I learned from, a little bit from everybody, but the most stuff that I learned from the more important information that I got from those courses, I was able to kind of put it in my own strategy. Can say, I don't really like to say strategy, but I put it in my own way and to a way that would make sense for me. And I kind of took all the complexities out of trading, because trading can be a very what's the word I'm looking for, convoluted subject, because there's so many different angles, so many different variables, so many different ways you can look at things, and I like to keep things as simplistic as possible. So I decided to, okay, this is what I'm being taught here, this is what I'm being taught here. How can I take these two things and simplify them to something that makes complete sense for me and makes the road a little bit more smoother to navigating how to execute on a high probability trade? So that's when I decided to take all the information that I learned, take as much fluff out of it as possible, bring it down to the bare bones. And then I created my own platform with my own course or strategy, you can say. And here we are today, where it's simple. My course is called Simple FX because I keep it as simple as possible, as I possibly can, to where I should have named it Forex for Dummies.
Right, yeah.
Because that's how simple and bare bones it is, to where a 10-year-old can learn how to trade from my strategy. So yeah, I feel like you have to kind of get out there and expose yourself to as much knowledge from as many things as you can, because that's the only way you're going to know what works for you and what doesn't.
And so I'm interested to hear how you sort of validated what you came up with. I mean, hearing from other people is great, and then applying it's okay, but I suppose getting the confidence that it's going to work needs some kind of back testing, etc. And also trying to fit it within your lifestyle as, being a police officer and having shift work, probably, sometimes in the evening, sometimes days. How did that all play out for you to, squeeze it in there?
It wasn't as hard for me because I didn't have any kids. I was still very young at the time. I mean, I'm still young, but I was younger back then. So I had a lot of energy. I could stay up all night and study. I could wake up early in the morning and study. And my job wasn't as demanding as people think. I had a set schedule. I had a lot of control of my schedule as well. And I had a lot of flexibility in my schedule also. So where, when I wanted to trade London session, I would just work the afternoons, and then I would get up early in the morning and trade London session, and then I wouldn't have to go to work till that afternoon. So in the first, I would say, half hour of the day, from like 9 to about 11, 12, I could sleep, and then I would get up around 1:30 and get ready to go to work and be at work by 2. So and then when I wanted to trade New York session, that's when I would work the nights. So I would work afternoons. So I had a lot of flexibility in my schedule, so it wasn't hard for me. And on top of that, I pretty much based trading around my job, and every free ounce of time that I had, I dedicated to learning how to trade. I was always on the charts, even while I was at work. As a police officer, you have a lot of downtime most of the time. When it's busy, it's busy. But when it's not busy, it's boring. It is boring. So when I used to work the night shift, I studied a lot during night, because you have to be awake. You can't really be sleeping, because you have to, be aware of what's going on around you and things like that. You never know when something's gonna happen, so you kind of have to be alert. So to keep myself up at night, I was studying. I was either studying a course, I was on YouTube, I was back testing charts, I was paper trading at times. So any ounce of time that I had, I wanted to dedicate it to trading, because not only did I really want to learn trading, but I saw it as a way to get out of my job, because at the time I was really struggling with what I was doing at my job. I was struggling with the people I was working with. It was a very high stress environment, and I didn't see myself being there for a very long time. And I needed a plan B. I
Yeah.
needed a plan B. So I said, okay, I don't have a college degree. I don't really have anything to fall back on. This has to be it. Something has to be it. And it wasn't easy. I don't like to use the word easy when I talk about trading, but at the time it was one of the easiest things. It wasn't like I had to take a bunch of money and go start a restaurant or something, something like that. It was just me studying and putting in the time, and I had an ample amount of time. So I really credit having that job, because it gave me the motivation that I needed to stick with it and to not quit, because it wasn't easy at all. It was not easy at all. But
And when you were doing your, like, say for example, your back testing and paper trading, I mean, was there something in there that like was an aha moment for you, where you thought, oh man,
yeah.
this is the one? And did you have to go through various iterations to find what you do now?
Yes, I had to go through various different strategies. I had to, because the thing is with strategies, you can't test it out for 1 or 2 days. You got to give it enough time to actually tell you that the strategy does work or it doesn't work. So and that's why the learning curve with me was a little bit bigger than for most people, because I gave things months. I studied Wall Street Academy for 9 months before I even looked into another course. And even when I did look into another course, I was still studying that course along with Wall Street Academy. So I was kind of putting things together. So I had my little aha moments here and there. But when everything clicked for me was when I discovered scalping. Because when when I first started learning how to trade, I did not know what scalping was. I'd never heard of it. I thought when you're trading, you had to catch an entire move, when in reality, you can catch this much of a move and still make money. So when I discovered scalping, it changed the game for me on its head, literally upside down. And I never looked back.
And how did you discover it? What was the key thing for you?
It was through Raja Banks. It was through him. I stumbled across his YouTube live when he was doing the live sessions on YouTube. I don't know how I found him. I think he just popped up on my explore page or something. And I started watching, and at the time, I didn't even know people did live trade sessions. There weren't that many people doing live trade sessions at the time. So when I found him, that was a new thing for me. I was like, oh, people are actually doing it like live and in front of people. And at the time, I think he had like 200-300 people watching. Not that many, but I watched him for like 3 days. 3 days I watched him. And it just so happens, once again, that he was having an in-person course in Miami. And at the time, he was living in Canada. So I said, wait a minute, he's coming to Miami and he's going to be showing us how to do this. I got to meet this guy. I got to go. And at the time, I was struggling. I was really struggling because I was still swing trading, trying to hold positions, trying to, I was over leveraging a lot, trying to make back losses. I had a lot of bad habits. My risk management was out the window. It was tough. It was tough. But when I found him, what took me with him was that he was scalping, and not only was he scalping, but he wasn't using any indicators. And I had probably maybe 6 or 7 courses at the time that I had bought at that time. And every single one of those courses was centered around indicators. And indicators was a very hard topic for me. And when I saw that this guy was trading literally with nothing but looking at the candles, I said, this is it. This is it for me. And I used my last $1,200 that I had like to my name. And I didn't even have it. I bought it on a credit card. And I was just hoping, praying, please let this card go through because I didn't have the money, And I was able to get the class, to get in. And I actually called out sick because he has his in-person over the weekend. And I used to work over the weekends. I never had weekends off. So it was 3 days. It was a Friday, Saturday, Sunday. And I called out sick all 3 days.
Right.
All 3 days. I didn't care. I was like, I want this. And ever since then, I would say 3 months after that, I took that in-person class was when I actually started seeing a lot more upside to my trading. I would
Right.
say after that. So that
And
was
so, okay, cool. So what was the sort of, I mean, obviously candlesticks, what were the other key things around this? So there was purely a scalping approach. On
yes.
what timeframes were you looking to get in on?
I would say mostly the daily, the 4 hour, and then 30-minute entries was it for me. Now I've graduated to looking at the 5-minute to take my entries to get better entries now, because obviously it takes time to get better with your entries. But understanding how to analyze my daily, my weekly, my 4 hour time frames, the higher time frame correlations is everything with trading. It doesn't matter what kind of trader you are. If you're a scalper, intraday, swing trader, you still have to know how to break down your high time frames. I'm of that belief. And once I was able to master that, then I said, okay, now I can look at other things. I can understand market structure. I can understanding volume in the market. I can understand how to correlate time frame correlation and put that with market structure. And how do I use that to get myself better with entries? How do I know when to get in, when to get out? What are the best stop losses? What are the best take profits? And then working on my psychology as well, being content with just taking, a small amount of pips and leaving the rest on the table, because most people, they want as much as they can get, but it takes a different type of discipline to say, I'm only catching this many pips, and once I hit that, I am out. I don't care how many more goes after, I'm getting out. That discipline, I had to grow into that. I had to build that within me. And once I did that, I mean, it was game over at that point.
And now I remember, like, Raja, from memory, he has been on the show. Sort of would look to take maybe 20 pip profit. What did he like a fixed take profit kind of approach?
He was a 10 pip god. It was 10 pips for him. It was 10 pips. And this is the thing with him that did it for me, was after I became his student, I took the in-person class. You're in the student group and whatnot, and he was always active in there, always talking, always accessible, which I liked, because in many other courses that I had bought, good luck getting a hold of the person that made the course. You're talking to other students that have the course, but the main person wasn't very active in there. So when I saw that he was active, and I was like, oh, I can message him, and he's messaging me right back, and I could ask him questions, and I could send him chart work and stuff. So I thought that was really cool. That was very different. And one day I messaged him and I said, hey, Raja, I'm really struggling. I'm on the verge of giving up. I can't seem to understand this. I can't seem to get anywhere with it. I don't know what to do. And he messaged me back and said, hey, let's do a one-on-one. And it blew my mind, because I'm like, a one-on-one, like just you, like just us, like nobody else. Like he's like, yeah, like, when are you available now? Let's do it now. And I was like, oh my God, I started, and I'm freaking out, because I'm like, I did not expect that. I expected him to say, okay, it's okay, just keep studying, keep your head up, typical stuff. But he took a special interest in me actually getting the help that I needed. And that really, really resonated with me. And after that, it was like we were on for about maybe 2 hours, 2.5 hours, almost 3 hours. And The only reason why he got off was because he had to go spend time with his kids and stuff. But he took that much time with me, and after that, he said, Charlene, after go what we went over today, and every day I want you to send me your charts every day. Every single day, send me your charts on every trade you take. Do this, this, and this. Go for 10 pips, get your 10 pips, and get out. Be done for the day, and that's it. Do that only, and I promise you, you will see a difference in your trading. And I did that. He could have told me, wake up in the morning, do 3 backflips, touch my nose, and sing like a bird before I traded, and I would have done that.
Yeah.
So I said, you know what? This guy knows what he's doing. He's teaching. He's taking the time out of his day to help me. The least I could do is just do what he says to do. And I did that. I sent him my charts every day. Every day that I traded, every session that I traded, I sent him my charts. He would give me feedback. He would help me with this and that. When I got in my trades, I took 10 pips and I got out. I would close out at a certain, if I took a loss, it was a small loss. I was managing my losses the way he taught me to. And ever since then, I've been profitable ever since.
Well, and so are you still taking 10 pip profits, or have you sort of changed that?
I'm catching more now, but I still have that mentality. I still have that
right.
Where, like, okay, I'm okay with 10 because obviously I'm using bigger lot sizes now. So my being content with a certain amount of profit is at a level where I'm okay with it. So I really don't mind just taking 10 pips, but I've kind of pushed myself to catching a little bit more. So I'm even trading a little bit more volatile pairs now that I know will push at least 20, 30, 40 pips in a move that normally I would only get 10 pips in. So now I'm not typically just getting 10 pips. I'm trying to get more, but I'll never like leave that mentality to where I'm too good to catch only 10 pips now. I will never be too good to only catch 10 because it's a blessing to even be able to do that. Some people can't get a win at all, so to be able to do that consistently is definitely a positive.
And so with this style of trading, I mean, do you have, I mean, are you able to sort of adequately sort of relay what's the risk to reward ratio kind of thing? Mm-hmm. So, because I know that from memory, like Raja will, if it goes into 50% drawdown, he might take off half the position and then get out with half the, and get us a break even trade or something like that. So there's ways to manage it, which makes it a little bit harder to go, it's a fixed, 3R kind of trade. How does it typically look for you?
Well, I actually stack my positions now, most likely because I'm trying to maximize my profit potential on the same amount of, I guess, risk, you could say. Because like, for instance, let's say I'm looking for 15 pips on a move, which isn't very much. But if I'm catching 15 pips on, let's say, 3 positions, I've now maximized my profit potential on the same move that I would have caught for that 1 position. So I'm already exposing myself to a certain amount of risk, but I typically do not close partials. I don't even use the magic keys much anymore. I do trade everything manually, but I'm so, what's the word I'm looking for? I'm very confident in my strategy to the point where I'm okay opening those positions and taking that level of risk because I know exactly where I'm going to get out if the trade goes against me, and I know where I'm going to get out once it goes into a certain amount of profit. And I've done it like that now for like the last 3 years. So I don't see myself changing it anytime soon. I'm okay with the level of risk that I've taken on my account. It's shown me that I'm pretty profitable doing it. So no, I don't typically trade like him when it comes to, closing partials and whatnot, because I don't even know if he stacks. I don't think he stacks, but I'm seeing that becoming more of a thing now with stacking positions. A lot more traders are doing it. I know I do it. Raul does it. Q does it. A lot more traders are coming out with stacking positions, and it's just a benefit to me because if you're already in a trade for one, for catching that same position for one, I mean, it doesn't have to be the same lot size. It can be a smaller lot size. It can be a half of a lot, whatever it is. But why not make more? If you're already in the move, why not maximize the profit potential? You know what I mean? So that's just kind of my ideology behind that. But it's not to knock closing partials at all. You should still do that if you're someone who wants to really, keep your discipline to a T. Most definitely, if the trade is going against you, but you still have confidence in the setup, more than likely you could take a little bit of risk off of your trade. until the trade tells you, hey, it's not going your way. Maybe you should get out 100%.
Hmm.
So I mean, it's all up to preference to me. It's about preference and everyone's different level of risk.
Yeah. Yeah. Now, what about winning rates and we'll go through some of the stats. Like, what's your win rate look like?
You know, I'm not big on percentages, to be honest with you. I suck at math. So I know I'm profitable. If I had to put a number on my win rate, it would probably be like in the high 70s, low 80s, I would
Right.
say.
So you
Like
don't
for
lose very often.
instance, yeah, yeah. I would say, like for instance, this past January, I traded live on YouTube for the entire month, from January 3rd all the way to the end of January. And in that entire month, we traded every day. We only took 3 losses that entire
Right.
month. So to me, I mean, that was great. That was a great start to the year, I gotta say.
Yeah.
And to do it live was amazing. You know, people were killing it like crazy, which was awesome. Is it like that all the time? No. Not only that, but the thing is, I don't trade every day anymore. I was only doing it every day because I was doing the live sessions. But if I wasn't doing the live sessions, I wouldn't be trading every day. Because if I have a good day, like if I have a good day or even a good week, if I'm doing like, let's say if I have a 10K day, or let's say, I don't know, a 20K week, a lot of times I'm not trading all the time after that anymore because I'm okay with that profit. I don't really like to put it at risk after I've already made it. And then on top of that, I have other businesses that I do outside of trading that take up some of my time. So I don't dedicate too much time to trading anymore because I have other endeavors and other things that, require my time. So it's kind of hard to put a percentage on my win rate because I'm not trading every day anymore. And when I do trade, yes, I win more than I lose, but what's the percentage? I would have to break it down week by week or something
Yeah.
like that, month by month, to really give you a solid number.
Yeah. Well, it sounds like it's pretty high. I mean, how many instruments are you trading?
I'm trading US 30 now, which I'm still kind of getting the hang of, but my main pair is gold and my backup pair is AU. So those are the main
Okay.
instruments that I trade now. Yeah. I
Okay.
love gold. I love gold.
And how many trades in a week would you take?
I typically take one trade a day or maybe two, because now I'm trading US 30. So I'm taking positions potentially on gold or AU and now US 30. Like for instance, I'm in a trade now on US 30 where I'm holding buys. So that would count as another position because I took gold this morning as well. So that's typically 2 trades. So on average, I'm taking really only one setup a day. So if I'm trading every day, I'm only taking one trade. So on average, I'm only taking 5 trades a week. So it's not very much at all, at all. I keep my it's quality over quantity for me.
And so what is your typical trading day? And I'm guessing you have days where you'll trade, and then if you make the profit, then you'll stop. But what would
Yes.
that day be like?
So I get up every day around 6:15, 6:30, the latest, and I'm on the computer by like 7:15 ish. I would get up and the first thing I would do is I would check the news. I would check Forex Factory for news to see if there's news out there. I don't look at any other pairs except the ones I trade. I don't look at any other pairs. So I only look at gold. I'm mostly AU for my backup, and then I have US 30 that I'm still studying, still learning. I don't rush into US 30 though. I'm still taking my time with it because I trade it very differently than I do gold or AU. And then on top of that, in my experience with US 30, it doesn't move until like 8, 8:30, 9 o'clock anyway. So I'm on the charts by 7. So I have a good amount of time to chill with gold or AU until I look at a US 30. But for the most part, I usually find my setups by like, I would say 8 o'clock to about 9:45. In that window of time is usually when I find a setup because I'm usually off the charts by like 10:30. 10:30, 11, at the latest. So my trading time is between 7 and 11 in the morning. If I don't find a setup in that time, I'm off the charts and I'm going about my day. So that's my schedule every day. I wake up at that time, I trade from 7 to about 11, and then I'm off. Usually once I get my setup, if I get my setup, sometimes I'll get it at like 7:30, 8 o'clock. Once I grab my 10, 20 pips, I'm usually done. So I'm off. I'm gone and I'm, living doing my day. So sometimes I'm not even on the charts that long. I grab a
Yeah.
quick setup and I'm out.
So interesting you say AU's your backup. I mean, what was the thinking around AU?
Well, with gold, it doesn't always give me the setups that I'm looking for, and it typically moves similarly to gold. However, it's not as volatile as gold is. So I love the way it moves. It correlates well with gold as well. So usually it's like back and forth. If gold doesn't give me the setup, I most likely will find something on AU. And if AU doesn't give me a setup, I'm probably not trading for the day. So that'll be a no trade day for me. But for the most part, if I don't find a setup on one, I'll find a setup on another. And now I have US 30 that I'm learning. And pretty soon, I would say in the next, like by this summer or maybe the end of the year latest, I want to only be trading US 30 and gold.
Righty ho. Now, so I suppose over the course of 2018 to now, the whole prop firm thing has just exploded. Did you ever dive into prop firms and try the challenges, and how did you go?
I did. I did try FTMO. I've tried Top Tier. Those are the only ones that I've ever tried. I know of other companies. I'm not a big fan of prop firms because I do think they work. I think they're great for traders who just don't have the funds available to them to risk in the live markets. But I also feel like it kind of hinders certain type of trader because it changes your trading style. I'm a very risky trader. I like to take risk. I don't mind taking risk. No risk, no reward. You know what I mean? So you can't really be a trader if you're not willing to risk something. To make big money, you have to risk big money. So with prop firms, I feel like the rules are so tight sometimes that it's very hard to color within the lines with them, and that's why they're so hard to pass because the parameters, the risk parameters that they give you are just so minimal, and it's easy to kind of dip your foot in that pool. So it's tough. But the flip side of it is I feel like the risk management that they teach you to abide by is great. I think it's great. I think if more people implemented those risk parameters on their live account, they would probably see a lot more consistency as well. But it all depends on the kind of trader you are, the type of risk you're willing to take on your setups, and your knowledge as well. Because at the end of the day, it's not about your account size, it's not about anything. It's about your psychology and your skill, because those are the two things that are going to help you become a consistent trader. And without those, doesn't matter how much money you have. You could have $1 million account. You're going to blow it just as much as you would $100 account because you don't have the skill required to be able to manage your trading.
And in terms of it sounds like you've got a unique approach to risk and risk management. I mean, how do you sort of determine how much you're going to put at risk on one particular trade?
So it depends on the setup that I'm looking at. Like for instance, if I'm seeing, let's say, a high probability setup where I'm typically a break and retest volume trader. So if I see, I plan my trade way ahead before I take the trade. On my live sessions, I show my students and the people that are watching how I actually plan the trade before I'm even in the trade. So before I'm in the trade, I know where I want to get in. I know where I want to get out if the trade goes against me, and I know, where I'm willing to hold my trade if it goes into a certain amount of profit. So I'm big on that. I'm big on trading plans, and I'm big on knowing exactly what you want to see happen before you ever hit the buy or sell button. You have to know what you want to see happen, and that's going to give you the confidence to get in. Okay, I look at it like this: if I say to myself, I want to see a bullish engulfing, I want to see a break of this level, I want to see support being held over here. If I see ABC, I'm executing because I already said these are the things I want to see happen that are giving me the confirmations that I need to back up my bias. So what's the point of doing an analysis is if you see what you wanted to see happen and you don't execute. So if you plan your trade and you see your plan literally playing out in front of you, you need to execute because that's what you wanted to see happen. Now, before you get in, you made a plan. The plan was I'm going to see this, this, and this. And if this, this, and this happens, then I'm getting in. But before you do that, if this, this, and this happens after this, is it going my way or is it not? Because if it's not going my way, I got to know where I'm getting out. And if it is going my way, I also need to know where I'm getting out because it may not go your way forever. Where are you going to be okay with grabbing your profits, taking profits? Are you going to be leaving some runners? Are you going to be done for the day? Are you going to be looking for a second opportunity if it's a loss? These are all things. It's constant like Q&A that's going on in my head when I'm looking at the markets and when I'm looking to take a trade, because I feel like these are things you have to actually be experiencing when you're in a trade. You cannot just take a trade and say, whatever happens, happens. The markets are too volatile for that. Okay. It's like, I like to correlate the markets with a casino. The house always wins, So how can you give yourself an extra edge so you can have a little bit of an advantage for you to win? Because statistics say 95 people typically lose at trading. So how can you be part of that 5-10% to where you can get out on top? Well, the more you take profit, the higher your win percentage is going to be, because you're not in the markets anymore, exposing yourself to potential risk. So it's all about the setup for me, and it's about planning your trade from beginning to end. Absolutely.
And so just like on like a percentage of your account, I mean, how much would you be taking from a risk percent? Like if you break it down as a percent, or do you just use fixed lots and just?
Yeah, I like to use fixed loss, and I'm not big on flipping accounts. I like to put a certain amount of money into my account, and I like to have a principal amount. So if, let's say I load up an account with, let's say, 50K. If I was to get the account to, let's say, 60K or 65K, more than likely I'm pulling that profit out and I'm just doing it all over again. So I like to keep a certain principal amount. So when I start my day, I already have a number in mind of how much I'm willing to lose. So I don't know the setup. I'm going to see it. The setup is going to dictate what I'm going to risk. So I don't know the setup, but I already have in my mind, okay, am I up on the week? Am I down on the week? Can I play with house money? Can I risk a little bit more? Because when you have a little cushion, let's say I have 50K in my account, and let's say I had a 15K day or something. So now I'm up, $65,000, $70,000 in the account. My principal amount was 50. I'm already up on the week. The week has just started. I still have time. So maybe I want to risk a little bit more to kind of build a little more on the account, or do I want to risk a little bit less because I don't want to burn up all that equity, all that profit that I just built up, all that cushion that I just built for myself. So I'm looking at the setup. If the setup is a high probability setup that I've taken several times before, and I know that it usually plays out, more than likely I may want to risk a little bit more. But if I'm not sure about the setup, I'm gonna take my foot off the gas a little bit and say, do I want to take this setup? And if I'm not so sure about it, maybe I will reduce my risk. I'll reduce my lot size. Maybe instead of taking multiple positions, I'll take one position. So I do use risk management when it comes to that, because I don't just want to just blow money. I'm not in the market of losing money like that. So I don't care how much I'm up. I still don't like to lose. You know what I mean? So it all depends on the setup. And once I see the type of setup that I want to take, then I'm like, okay, that's going to dictate how much I'm going to risk. But like I said, every morning when I come to the computer, I already know I'm going to win. I start my day off always positive, always, okay, today's going to be a winning day. And even if it's not, I already know how much I'm going to lose, because you have to resign yourself to being okay with a certain amount of loss, because you never know how much you're going to make, but you control how much you're going to lose.
So what about if you're like, so say it was a 50K, account you started off with, what would be the figure in your mind saying, okay, well, I'm happy to lose this amount? What would that figure be?
In a day or a month?
Or in a day? I suppose a day.
In a day, I would be okay losing maybe 2,000, 3,000. Anything over like 4,000 would be a lot.
Right.
That would be a lot to me. Yeah. But that's it. If I'm losing that, I'm good for the day. And either that, I'm looking for another setup, or hey, wasn't my day, so I'm just gonna sit on my hands for the rest of the day.
Yeah. And do you have any sort of rules around, like and you won't take any more than say 2 setups, or if you have a win, you're just gonna stop? Is it anything like that?
Typically, when I have a win, I kind of stop. I don't like to be greedy. I feel like I was blessed with this win. If the win was a tough win, like, I was in drawdown for a little bit, or it gave me a hard time hitting my profit, most likely I'm going to be done for the day, because I'm going to be like, the markets kind of weren't on my side today. Yes, I ended the day with a win, but you know what? I need to call it a day here. Other times, let's say I'm up a lot on the week and I risk a lot on a trade, then in some cases I might look and say, is there another setup here? But for the most part, I'm not very greedy. That's why my win rate is so high, because I take profit quickly. I take profit fast. When I did my live session, some people were mad because they were like, hey, why did you close? And if gold flew another 30 pips, I don't care. I'm good with what I got. So yeah. I'm not shy to take profit at all.
So you might even, like, say for example, on this let's say this 50K account example, happy to lose $3,000, but you might also be happy to take $500 and go, I'm going to walk away because it's just not playing out, and or is that too low?
Yeah, it's a bit too low.
Right.
I wouldn't. I mean, it depends, right? Because let's say I was in drawdown for a majority of the setup, and I got into profit, and it's lingering right at break even, right around 1 pip, 2 pip profit. And it's just, there's no volume, it's not pushing. Because mind you, again, this is in tone with my plan for the trade. When I'm as a scalper, you're a momentum volume trader. So when you get in a trade, you don't have time to wait 2, 3, 4 hours for it to take off. We're looking for it to move right then and there. So a lot of times I'm not in trades very long. I'm in trades at the most maybe 30, maybe 45 minutes, depending on the volume. But there have been times I've caught 5 minute candles, I've caught 15, 30 minute candles. I'm in and out, in and out. So 500, no, that's nothing almost. So I wouldn't look to be catching 500 on a 50K account. I'd be looking to, if I'm willing to lose maybe max 3 or 4K, I better make 7, 8, 9 on the trade.
Right.
So that's typically what I'm looking to make. And when I say that, it's, I have 2 or 3 positions open. So if I have 2 or 3 positions open, let's say I'm up, I don't know, 10 pips, 15, 20 pips. That's on the lot sizes that I use. That's typically $2,000-$3,000 per position. So I'm already hitting my goal once I'm up 10, 12, 15 pips. So at that point, I'm okay with closing out because I've made a good amount of money for that day because of that risk. You know what I mean?
It is compared to a lot of the guests that I have on the show, it is high risk trading. So it is an art form. And how did you get into that mindset of taking that kind of risk approach?
I noticed it when I was only catching 10 pips and I was catching it so consistently. I was doing it so consistently. So there was a point where I was catching 10 pips. I was trading New York session and I was trading Asian session. And I was trading GJ. At the time I was trading GJ, that was my only pair. And GJ moves all day, it moves all the main sessions. So I was able to catch 10 pips during New York and 10 pips during Asian session. So what I realized was I was using a standard on one lot. So I was making $100 during New York and $100 during Asian. Like, oh, I'm at $200 a day. That's great. Then I noticed, as the weeks and the months went on, I was doing it rather consistently. And even on my losses were relatively small because I was only taking 5, 6, 7 pip losses. Sometimes I would let it hit the 10 pip loss, but for the most part, I was taking relatively small losses. So I'm like, man, I can do this consistently. What if I open up another position with that one position I already have open, still catch the same move, just add another position trying to maximize on it. So then I tested it out. So I would have a one position, I'd have my main position open, then I would open up a smaller one, like a 0.50 or a 0.30, and I would catch 10 pips on both of those positions. So I was doing like $130 a day or $150 a day. So once I saw that I was consistently doing that, I did the same thing for Asian session. So now my $100 days were turning into $300 days because I was adding positions, catching the same 10 pips, but just adding an extra position. So once I saw that I could do that, and as I started raising my lot size, where I would go to 2 lots, 2.5 lots, 3 lots, then I went to 5, 6, 8, and 10, and I said, okay, now I can, instead of having a $300 day or a $500 day, I can have a $1,000 day on the same level of risk. But now my stop loss has to be a little bit more tighter because now I have 2 positions open instead of 1. So instead of being in the 5 pip drawdown, I'm in literally 10 pips drawdown because I have 2 positions open. So now my entries had to be much tighter, a little bit much better. So I kind of tested it out for months because I was scared of, doing that because it was still a lot of risk. But once I said, Sharline, you are consistently catching 10 pips. If you have the confidence to do that with one position, you should be able to do it. It's the same thing. It's the same thing that you're doing. You're not doing anything different. It's just you're adding another position. So I kind of took that and now it just has a life. It's just a part of my trading now. It just I stack on my positions. I love it. And I win way more than I lose. Way more than I lose. If I was losing a lot with it, trust me, I wouldn't be doing it. Trust me, I wouldn't be doing it.
Yeah. It's interesting, because that's actually really interesting to hear how you got to that point, because I think that's going to help a lot of people who are sort of thinking about, it's a high stakes approach to trading, and how do they get there is the difficulty. It's like, whereas most people would think, you just went from, I'm trading 1 lot, now I'm going to bump it up to 3, and then away we go. And it's now I'm going to do 10s, and that on a mindset point of view is going to screw you over straight away, right?
Oh, yeah.
Whereas I like that, multiple positions. What about talking about mindset? Have you got any sort of special things you do to try and get your mind in tune before you start trading, that kind of thing?
Well, I don't trade when I'm going through personal things in my life. I feel like if you're not able to give the charts 100% your undivided attention, you're already in the negative because it requires that type of respect where you have to be locked in. You have to be focused. You have to know what you're looking at. You have to stick to your rules, stick to your discipline, stick to your trading plan. And if you're looking for a setup, you might be thinking about what's happening over here, what's going on with this, family member, with your relationship, with work, or whatever is going on with your kids, whatever could be going on, then you're not 100% focused, and that can fog your the clarity that you need to have when you're trading. It may make you see something that's not there. It may cause you to have a lack of patience because you're anxious, you're ready to go do whatever, go take care of this, and you want to just get this trade over with, and it will cause you to prematurely enter a setup before you possibly you should, and cause you to take unnecessary losses. So I'm big on making sure your head is completely clear before you come on the charts and expose your account and your psychology to a beating is what it is.
Yeah.
Being patient, being patient, waiting on setups. Sometimes missing your setup. Sometimes I sit here and I'm watching, waiting for my setup to happen, and it won't happen the way I want it to happen. And when it does happen, I'm missing it. So I just sat here for 3 hours and missed my setup, and now I gotta go about my day. And had I not been trading, if I didn't, have this going on, that wouldn't have happened.
Yeah.
So
Okay.
yeah, I'm very spiritual, so I meditate a lot. I'm very big on prayer, very, very big on self-talk, self-help, things like that. So I truly feel like you got to have your head on wrapped straight, to be a trader, to sustain being a trader, to, withstand the mental pressure, the mental stress that we all go through, putting our money on the line every day and having to deal with the things that we have to deal with. So you have to have all your ducks in a row for you
Yeah.
to be profitable, because if not, it's too hard. It's too
Mm.
hard, and I'd rather you not do it. So
Okay. Well, next question is what about if you had to recommend somebody go away and study or spend the next month mastering something, what would it be?
um I'm a big believer in back testing. Big believer in backtesting, because nothing is going to help you master the charts more than being on the charts. Because you could say, hey, read this book on psychology, or go watch this video on this, or do that, or talk about risk management. All those things are very, very important. However, none of them are going to matter if you don't get your butt on those charts and backtest the heck out of those charts. You have to learn how the market moves. You have to become familiar with sessions and become familiar with market structure. All these things are what is going to help you really dive into the DNA and the genetics of the Forex markets, because it's a very highly volatile market space. You have to have a certain level of knowledge and experience for you to even think that you're going to be profitable in these markets. So everything, all those other things, they come great, but I wouldn't be where I am if I did not dedicate as much time to backtesting as I did. I was on the charts every day, sometimes all day, and I loved it. I loved it. Trading, to me, learning and studying, it wasn't daunting. It wasn't boring. It wasn't. I enjoyed it. I literally enjoyed it. I enjoyed every minute, even the things I didn't understand. I enjoyed researching and trying to find an understanding of it. So you have to find the joy in it too. Find happiness in doing it, because if it's something you really don't want to do, you're not going to be 100% focused. You're
Mm.
going to think, I have to do this. Let me just get this over with. And when you get to the charts, you're going to be as lost as you were when you first started, because it's not fun. It has to be fun. You got to find a passion for it. You got to find a joy in it, because if you don't get a rush from it, it's not for you.
Yeah.
I'm
Yeah. It's going
sorry.
to be too hard. It's going to be too hard. Now
Yeah.
we're going to wrap up here with some quick fire questions. So first one,
Okay.
how long did it take you to go from newbie to consistently profitable?
It took me 2.5 years. 2.5 years.
What's your favorite entry setup?
Uh, Break and retest for sure. Definitely break and retest.
What strategies do you use to exit or manage your trades?
Um, the 10 pip stop is usually what it is, 1 to 1, 1 to 2 risk parameters. But That's a hard one because it depends on the setup. Because my trading has definitely evolved now than it was back then. So that's typically hard for me. But for the most part, because I'm looking to only catch 10 or 20 pips, just know that I'm not risking any more than that on my stop loss. So.
Okay. And what about a recommended trading book or resource?
I read one ebook when I started trading, and that was the Candlestick Bible. That's the only book I've ever read. I've heard of other books that some other people have mentioned. I've never read them though. So I can't really recommend any books. I've never read any. The only one is the Candlestick Bible. So that's the only one I can recommend.
Okay. What about a preferred broker and trading platform?
Oh, Henko Trade for sure, for sure. I've been with them not since I started trading, but very early on in my trading career, I've started with them, and I haven't had an issue. I haven't had issues with withdrawals, the spreads. You know how your setup freezes or you can't get out of a trade or whatnot. I haven't had that issue with them. The customer service is amazing. When I deposit money with them, it's fast, and when I take out money with them, it's fast as well. So that's the most important thing, right? You want to be able to get your money in and out. So if you don't have issues there, you're good. And they do deposit bonus as well, which is huge in the industry. So I definitely recommend Henko Trade for sure.
Hey folks, ever wonder what broker I use? Well, I use Henko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Henko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at henkotrade.com or just click the link I've put in the description. Okay, and let's have an ad from them right now. What can you walk us through your worst ever trade?
Oh wow, yes, I can. I'll never forget it. I had deposited $30,000 into my account once, and at the time I was trading GBP AUD, which is at the time it was a good pair. Now I don't like it too much, but I was trading it and it had been ranging for weeks. For weeks, it was stuck in this giant, like 100 pip range. It would not break. And it was at a high and it was failing to make a new high. And I was looking for it to just jump. And at the time, I was happy because that was the biggest account that I'd ever been trading with. So of course, I over leveraged like I shouldn't have. And I threw in 3 10-lot positions in the trade, and I was looking for not the sell. I was looking for the buy because price was already bullish. It was holding support and resistance, but overall time frame was bullish. So hey, I'm looking for price to continue bullish. So I took buy the support and I opened up 3 10-lot positions on the trade. And I'm scalping, right? So I don't really trade with a stop loss. I close manually when I'm in my trades, and I had no idea that news was coming out. Some sort of news came out, and I'm in buys, three positions in buys, and it literally just melted. It melted on me. And in the time it took me to hit those X buttons to X out of the trade, I was down 15K. So I had lost literally half my account on that one trade. And that was the worst loss I ever took. At the time, it was the worst loss. And it was around the holidays. And I literally stopped trading for the rest of the month. It was towards the middle of December. I didn't trade again till the middle of January. After that, I just stopped. I was like, oh no. So yeah, that was definitely the worst. I never did that again. I don't even trade ranges anymore.
Yeah.
But that was definitely the worst I would say for me.
Right. Well, look, final question. If you could leave our listeners with one piece of advice, what would it be?
One piece of advice would be, if you really want it and this is for you, just don't give up. Keep studying, keep testing yourself, keep challenging yourself, keep pushing your limits. Don't doubt yourself. Don't project negative things over your life, over your training. If one person can do it, anybody can do it. So if you just put in the time and the effort and the dedication, you will reap the benefits. So just don't give up. Do whatever it takes and do not give up, because this will be the best opportunity that you've ever seen.
Brilliant. Well, before we wrap up, what's the best way for traders to get hold of you?
Oh wow, I'm huge on Instagram. I'm a big deal on Instagram. I message back everybody. I look at all my DMs. SharlineFx. A lot of fake pages out there, guys. So just don't look at the fakes out there, please. It's SharlineFx, just how it's spelled. No underscores, no dots, no extra letters, nothing like that. I will never message you first. All right. But I'm big on Instagram. I like I said, I'm always on there. I'm big. I have a huge presence on there. I love it on there. I enjoy connecting with my followers on there. So if you ever need anything, any question, anything like that, feel free to message me. And let's connect. Let's all connect. This is what it's all about.
Brilliant.
So.
Well, look, a big thank you to Sharline for sharing with us today. Everything we've discussed here, along with links to her Instagram, are all in the show notes. To find them, simply search for Sharline in the search box on tradingnut.com. And until next time, I wish all my traders and listeners happiness and success. All right, folks, interview done and dusted with Sharline. Now, do remember we shot a video after the show where she went through a bar replay challenge on AUD USD. Try and find some trades, get in, get out. You're going to find out really how she broke down the QBank's, Rajabank's strategies into her own simple strategy. So go and check that out on the YouTube channel. Other things going on here, remember there's the Fidel Crest 50k challenge, links under the video. Go and check that out if you're interested. Enter the competition. And also we've got the Robot Builders Club offer this February 2023, where you can get access to the bootcamp and the bot that we built with that this February. Also, do remember we're doing another build in there that you'll get access to, which is based on smart money concepts, sort of part of the smart money concepts concept. Okay, all right, enough from me. Thanks you for watching and listening, and we'll see you in the next one.